Alright, so what is up everybody? This is Brandon from At The Trading Camp, and in today's video we're going to be talking about the top 5 mistakes that new traders make. So without further ado, let's get into the video. So the top 5 mistakes that I see traders make is 1. Chasing the trade, 2. Not trading with a trading plan, 3. No risk management, 4. Not taking profits, and 5. Letting others influence your trades. So the first one we're going to talk about is chasing the trade. I've struggled with this a ton. So I've seen traders over and over again buy into a stock that has already made its move. So in a book that I've read, this quote really stuck with me. In this world, there is a sucker born every minute, and they exist to buy your investments at a higher price than you paid for them. Don't be the sucker in the market. So if a stock has significantly moved that day or week, wait for it to come back down because it's not going to stay up there forever. I saw people buy Tesla at the peak at 1700. So in that case, they were the sucker. They were buying the person's investment at a higher price than what they paid for it. And guess what? Tesla made like a $400 move that week. So what did it do? It sat up there and it came straight back down to 1400. So you could have waited a week or two, and then you could have bought into Tesla because now it's just chilling at like 1400. So for example, we're going to look at Kodak. So on 7/28, Kodak moved from $17 all the way to $60 in the matter of an hour and a half of the market being open. So smart investors got out at this price and left the sucker, in this scenario, shocked when the stock immediately went from $60 all the way down to $28. So in short, do not be the sucker in the market, be the person on the other side selling to the sucker. So then the second mistake is trading without a trading plan. So before the market opens every morning, you should have 4 things written down. The first one being the entry, which is when you plan on buying in. The second is your exit, which is where you should be exiting to secure your profits or cut your losses. The third being support, so solid support lines from monthly, daily, weekly, and hourly time frames. And then the fourth is resistance, from solid resistance from monthly, daily, weekly, or hourly time frames. So you want to then execute this plan every single day of trading. And then without a proper trading plan, you will not be a profitable trader. So for the third one, I made this a lot longer because this is something I see every single trader struggle with, especially at the beginning. So the third one is having no risk management. So I've seen people completely blow their accounts by not following the most important rule, and that is risk management. So people tend to overtrade and not cut losses when they should be. So I've been there, I've done that. And you should never have more than 2 to 3 open trades at a time, and I don't care how big your account size is. You could have $10,000, $20,000, $50,000, I don't care. Have 2 to 3 open trades at one time. It is a lot easier to manage 2 to 3 trades compared to 8, 10, 15, 20 trades at a time. I've been there. I had my $5,000 account and I had open 10 trades at a time. It is way too much to keep track of, and ultimately you're going to blow your account that way because if all 10 go against you, guess what? You just lost a ton of money from your account. So that leads into the next one, which is you should never be using more than 10 to 15% of your account size on active trades. So if you have an account balance of $1,000, then guess what? You can only use $100 to $150 of that. So if you want to take one trade and the contract is worth $50, take 3 of them. If you want to take 3 trades, guess what? $50, $50, $50. You want to take 2 trades, $75 and $75. Doesn't matter. 2 to 3 open trades at a time, and only 10 to 15% of your account should be used in those trades. So you should always have a set stop loss on every single contract you take. I've seen people, myself included, lose 100% of their investment because they failed to follow one simple step, and that is to generate your own stop loss. So on day trades, I usually give it around 20%, and then on swing trades, I could be a little more flexible, so like 40 to 50% is my stop loss usually. And then if you have a winner, instead of keeping your stop loss at 20% on day trades, 40 to 50% on swing trades, you can then set it to break even. So then you don't lose and you don't win. You simply just break even. It's like you never even took the trade. And then the higher the thing goes, just set the stop loss higher and higher. So let's say your contract is up 60%, set your stop loss at 20%, because no matter what, it is a win-win situation. So if you can follow these steps, you will become a profitable trader, and I promise you that. So this is an investor that I know personally where he has some pretty big losses because he did not follow risk management. So, no risk management leads to huge losses. This trader lost 100% of their investment on Spotify and Alibaba. So, as you can see over here, Spotify is the second one down. He invested $720 into this contract expiring on July 24th. So, actually, it already expired. It's August 2nd. But $720 turned into zero. He lost $720 on that contract. And then on Alibaba, he spent $215, also expiring on the 24th. And guess what? That went to zero. So just right there, he lost over $900 because he didn't follow a simple stop loss. So then on Intel, he's only down $5, so that's nothing to really worry about. He has till August 21st on that, so that's good. He can keep that for now. But then on Boeing, he spent $252, so that also expired, so that probably went to zero. But he spent $252, and when he took the screenshot, it was down to $43, so he was down $209.50 on that contract. So in total, he lost $1,100 of his account because he did not follow a simple stop loss. Day trades, 20%, swing trades, 40 to 50%. So he could have saved $600, $700, $800 to his portfolio if he were to use that stop loss, but instead he lost over $1,100 combined in these trades because one, he has 4 trades open when he should only have 2 to 3. Second being, he didn't even use a stop loss whatsoever. He just let the contracts go to zero. Does not make sense. Don't do that to yourself. So then the fourth one is being not taking profits. I've had people ask me many times that they should secure profits on a contract that is up 20 to 30%, and the simple answer is yes. So you should not expect $1,000 plus return on each contract you buy. 20 to 30% profit is usually a very solid place to secure some of your profits. So if you have 5 contracts that are up 20 to 30%, take profits on 4 of them and let the 5th one ride. So if it goes higher, awesome, but do not be greedy because that contract can go against you just as much as it's gone for you. So I've also had people ask me if they should secure profits on a trade that is up 500%. Really? I'm sitting here telling you to take profits on something that's 20 to 30% up, and you're asking me if you should take profits on 500%? That's a simple answer. Yes, take it. So secure your profits and do not be greedy. If you're looking for a simple way to get rich, the stock market is not for you. You're not going to get rich quick. So then the 5th one that I've struggled with for the longest time is letting others influence your trades. So this is something that everybody goes through. They want somebody to hold their hand throughout the trading process and fully guide them by telling them exactly what to do at all times. That is not the way that you're going to make money in this game. If you listen to somebody else every single day tell you what to buy, you're never going to be profitable. You're not going to be a successful investor, and you're going to blow your account. So I'm in a ton of Facebook groups for investing. I've seen so many people recommend an options play on a stock without any technical reasoning or fundamentals to back it up. Then when I follow up with the people that are like, oh yeah, I'll take it, I usually message them a couple weeks later or whenever the contract is supposed to expire. And guess what? They DM me back saying they lost money because they're listening to some random person on Facebook that probably has no clue what they're even talking about. They're just simply saying, oh, Boeing's going up to $350 by next week. Boeing's under $200 right now. So don't listen to those people. You're going to blow your account that way because you honestly have no idea what experience those people have with investing. So here's an example of me. I used to watch a trader every single morning live stream during the market hours, so 9:30 to 4, and he would call out options plays for the entire community, and we would all take them. However, 99% of the plays I took from him left me in the red and almost led me to blowing my entire account. So I was doing this on a smaller account on Tastyworks with $1,000, and I was up in the green before I started doing this, and then guess what? I lost almost half of that following this person, not using a stop loss, and not paying attention to what I should be investing in. So do not let other people influence your trades. Do your own due diligence and do not expect someone to help you every single second of every day. The only opinion that should matter on a stock is yours. So do your analysis, look for some fundamentals behind the stock, and then make your decision. So that's going to wrap up today's video. So if you are new to the channel, click that subscribe button down below, and if you could click that like button, because I'm showing my face and I really don't like doing that, so this is very nerve-wracking for me. I'm kind of sweating right now, but that is okay. And if you could comment down below and let me know if you make any of these mistakes. At the end of the day, like I said, the only opinion that should matter is yours. You should be doing your due diligence when it comes to these stocks. You should be learning how to chart and all that. You should be doing your own research. But if you are struggling with any of these steps, you can message me on Instagram. You can message me on Twitter at Carhorns. I'm putting it up on the screen now. So CARWHORNS, and we can talk. We can maybe hop on a call sometime. But anyways, like, comment, and subscribe. I'll see you in next week's video. So peace out.